All right. Am I live? Yep. Okay. Welcome, all of you traders. Today is Friday, February 24th. And I want to explain now why I like to see 3 confirmation candles on the daily in crypto to confirm a pattern. And that's mainly what this video is going to be about. Plus, we'll go over the 4 main indicators which I have been watching this week. I made a post in that regards, posting 4 charts I was looking at, and we're going to skim through those real quickly today as well. Let's get started. All right, so this is the cup and handle pattern that I had proposed, I don't know, last week, a week and a half ago, something like that. But remember, I said we could be actually forming a larger cup and handle pattern here. And that appears to be what's happening. So when we broke the neckline here, I'm going to get out my trusty arrow. I want to show you something. All right, so I made a video on Thursday night. I said it looks like we're wanting to break the neckline here on this cup and handle pattern. We had this little handle. I wasn't quite sure whether that was actually going to be a handle or not. So I cautioned everybody, wait for your confirmation candles. I said, if you're more aggressive, you can enter after you get 1. I prefer to have 2 or 3 closes, 2 candles above the cup. So let's just take a look here. This was Thursday when I believe this was Thursday. Thursday when I created that video. Soon after, this candle just smashed below that neckline. All right, so eager beavers on the long side got cut short. I'm sure the stops went off and they lost some money there. All right, so that's why you want to be a little bit cautious. We're still in a bear market, guys. You gotta wait for this confirmation to signify a swing to the upside. All right, next day we had an open below that neckline and a close. So here we got 1 close above. I like to see 3 closes. Next day we had an open and close. Next day we had an open, but look at this close, guys. Look at this close here on this red candle, right on the neckline. I do not consider that valid confirmation. Let me see if I can get out a pen just to be a little bit more accurate here. This red candle right here closed right on that neckline. All right, I do not consider that a third confirmation. It's too close. So I would have scratched that and thrown it out, and now we have to start all over essentially. Now we're looking to have 3 new closes above that neckline. So then we opened on the neckline the next day, closed above it. All right, that's 1, opened above it, closed above it. All right, that's 2, opened above it, closed right on that neckline again. Look at that, guys. That is, I'm going to zoom in here. That's not confirmation. That's not my third confirmation. I would not count that as third confirmation at all. All right, and in fact, look what happened. We collapsed below that neckline. So in all of this screwing around up here with the price, we did not get 3 confirmation candles closing above that neckline. Thereby, for a safe entry in this cup and handle pattern, I would have recommended not to enter. And I did recommend that. All right, so you really, for a safe trade, you really want to wait. Again, more aggressive traders would have gone in early, but if you went in early, you paid the price, right? All right, so now let's take a look at what's happening here on this pattern. This can still be a cup and handle pattern coming into fruition. What I'm going to do is I'm going to get rid of the handle pattern here because that is no longer a valid handle, as we have just observed. I proposed in one of my videos, one of my recent videos, that this may in fact be a larger cup and handle pattern where the neckline is up here at 25.2 approximately. All right, so if I take this side of the cup over here and just draw this down. All right, there's our cup. What's happening right now is we are forming a larger handle pattern. Now, this is not a bad thing, especially for the long haul. It just means that it's going to take a little bit more time to have upward trajectory. In fact, I would say this is actually a very good thing. There were two indicators that I also posted this week. One of them that was that the Bitcoin on the weekly candle was up against the 200-week moving average. I'm not going to switch this chart because it gets too noisy on the weekly. But essentially the weekly was right at that 200 mark, right where the neckline is. All right. And we hit that as resistance once again. And then the second thing we were looking at, I believe, was the dollar. And we'll go through that in just a second. And I posted four more indicators this week as well. But anyways, this is what I propose the handle will now look like, which in my opinion is a good thing. I say we swoop down to 21, 200, 21, possibly even coming down to this June. See this, get out my pen here. See this June 2022, this brown ascending trend line, possibly coming down there. That would be a very good thing for me to see, because if we touch that technical indicator, that gives us, or gives the bulls, permission to go ahead and run up again. All right. And then we'll go ahead and form that handle. This is this is all an assumption at this point. I call these things way early. And so a lot of times they may not happen as I'm proposing. I'm just trying to get you all ahead of the game. What might happen here? All right. So I do expect a drawback to at least 21,200, possibly down to 20,000 again. And if we hit 20,000, that is our permission slip. I think at that point we have the green light. The bulls have the green light to go. All right. Technically, that is a perfect retest of previous resistance and a good area of confluence to hit again. Okay, enough said about the Bitcoin. Let's jump through what I posted this week in terms of what we're looking at for the market, which cascades over into crypto. All right, so we are in a little bit of a pullback here. That's okay. Take a look at the dollar, and you will see once this thing loads. I just got my internet connection back, actually, guys. So it's kind of slow here. I'm not sure what is going on. I was without power for like a whole day. And well, not power. I was without internet for a whole day. I felt like I was living back in the 90s again. And we also lost power here for a couple of hours, and the internet's still kind of shoddy. So I don't know if this thing is going to load. Hopefully it does. Hopefully I don't have to restart this. All right, guys, where was I? Working off a hotspot now. I don't know. Internet has been in and out the last 2 days, like I said. So where was I? Here we are on the dollar chart. And when I posted, I believe it was my last post, I posted four charts that I'm looking at. One of them was the dollar. We can see this macro uptrend line here. And what I was waiting for at the time was this particular candle to close and or open and close above that macro uptrend line. That told me that the dollar was going to continue gaining strength. And what happens when the dollar continues to gain strength? All right, the rest of the market is depressed by that strong dollar price movement. But this is not all bad. As I stated in my posts, I'd like to see the dollar actually come back up here. If it does break this macro uptrend line, which it did, and test this whole area of confluence, which is currently the 200-day moving average intersecting with this longer trending macro downtrend line. It's too long of a name for that trend line, but it's a descending trend line that intersects precisely where the 200-day moving average comes through. So I believe that's where the dollar is headed. All right. Don't know if it's going to break back above the 200-day moving average. Hopefully not. And I say hopefully not because if it does, that's going to be serious for the market, and that will all spill over into the crypto space as well. All right, the other three indicators. All right, we were looking at if the dollar is strong, it's probably going to depress the market. The indicator the index we've been following for that price action is the S&P 500. This is the logarithmic view. And you can see here we broke below, closed, open, closed, open, closed, open, and closed way down here at the 200-day moving average. Now, that could provide us some strong support. And so we could get a bounce there. Or at the very least, we could rest on that for a couple days as the dollar continues its move up into this area of confluence before it hits its head and hopefully comes back down. All right. So the US 500 sitting on that 200-day moving average is pretty good. All right. That's good support there. I could hold out for a few more days waiting for the dollar to do its thing. The other two indexes, we were looking at the U.S. 10-year Treasury and the U.S. 2-year Treasury. Why? Because they tell us probably what the market is betting the Fed will do, and this tells us whether the dollar is going to get stronger or weaker. All right, the 10-year is currently trying to make a move above this area of resistance, this level of resistance. And so far it is looking like it's going to close above that level. But we do need confirmation on the daily. All right. So that's what I'm looking at here. Want to see that confirmation in the form of another candle. I'm not as stringent on having 3 candles close on the indexes only because these markets close. All right. So we will have a clean break if we can close above and then open another candle and close above. That's all the confirmation I need. That tells us the treasuries are betting on a strong dollar into the future. Now, this is the 10-year, so that's down the road quite a ways. Let's look at the 2-year. That was the other chart I was looking at. And same thing. We've got a level here of resistance and currently breaking above it right here. All right, this particular candle. Oops. And I'm going to move this little circle guy over so that we have that area being focused. All right, so that's what we are looking at right now. Looks like that 2-year, which is a shorter term indicator of what the dollar is going to do. 2-year treasuries are betting on a strong dollar. All right, we're getting into new high territories. Not necessarily a great sign for U.S. stock markets if we close above that level. All right, again, we got to watch the 2-year and the 10-year very closely. Closing above this level on the 2-year would indicate that I'm wrong about a Fed pivot or pause soon. All right, that would mean the Fed is going to continue, as they say they're going to do, increasing these rates at least by 25 basis points. No pause in sight so far is what the 2-year Treasury is looking to be betting on. Of course, we do need confirmation candle here, just like we do on the 10-year. So that's what we have to watch closely these next 2 days. We want to see confirmation being had on the 2-year and the 10-year. These, I would say, are the most important indicators at this point in time. All right. I want to see those confirmation candles. All right. And Other than that, I think that's all I have to say. Let's hope for the best here, guys. Really, again, the Fed is now at a place where they're not going to win, whether they continue rate increases or they pause. All right. Recession is certainly coming down the road. Everybody knows this. Everybody's banking on it. The question is, when down the road is this recession coming? How serious is it going to be? Those are the big questions. And you all know my opinion. I think in the stock market, we are going to have a bit of a blow off top. This is positive here that we are above this macro downtrend. And I was surprised on a non-logarithmic view to see us not only break above the downtrend, but also above the uptrend. And we stayed above the macro uptrend for a little over a week, at least a week, maybe 2 weeks here, it looks like. And so I was surprised to see that strength because I was not expecting that much of a move. However, we got that. And remember what I said, as long as we are above this macro downtrend line and we remain above the 200-day moving average, overall, this is just a pullback. The market's still going to be bullish into mid-summer and maybe early fall before we get that blow off top of our previous high, breaking our previous high from November of 21. November of 21. I think we could go to 5,000, 5,500 on the US 500 before we hit our recession. All right, now I got to work on stitching these two videos together so that you all have one big video to view. And we will talk to you all in the next video. Peace.